Welcome to part 3 of my lecture series on bank reconciliations. And this particular lecture is going to focus on errors and how we handle them in a bank reconciliation. As we talked about in the last video, there are two primary reasons for differences between the bank balance and the book balance. And these can be due to either timing differences or to errors. In the last video, we focused solely on timing differences. So in this video, we're going to talk about errors. And that is the step that we are on in our steps in the bank reconciliation. So when you have errors, it's a similar process as with a timing difference. You still have to ask yourself two questions, okay? The first question that you ask is, who made the error? And whoever is the party that made the error, whether it was the bank or the company, you're going to put it on the side of the party that made the error. Okay? And the reason for that is because they're the ones that are going to need to correct it. Their records are wrong, we need to correct it. The second question we need to ask ourselves is, what needs to be done in order to correct the error? If we need to correct the error by increasing cash, we're going to put it in the add section of the reconciliation. But if we would need to decrease our cash account in order to correct it, we would put that in the deduct section. Okay, so let me give you some examples of this, because really when I explain these two questions, it seems pretty straightforward, right? Like if I need to increase it, put on that side. If I need to decrease it, deduct it. But it's not that simple. And I will tell you, this is the area that students struggle with the most when it comes to a bank reconciliation, is they don't know what to do with the errors. Now the thing is, errors really can end up in any one of the quadrants, depending on what happened to cause the error. And errors can happen in a bunch of different areas. You can have an error in a deposit that you made, and you can also have an error in a check. Okay, because what happens is you have one person who is responsible for making the deposit, so gathering all of the checks or the cash and taking it to the bank. And separately, you have the accountant who's going to actually record it in their financial records. Same thing with the check. You have one person who's responsible for writing the check, and you have the accountant who's responsible for recording it. So for these reasons, the true deposit amount might be different than what's recorded by the accountant. They may record it too low, they may record it too high. Same thing with the check. The person who wrote the check is going to write it at the correct amount, but the accountant who records the check may record it too low or may record it too high. And any of these scenarios, you need to figure out what to do about the error. So what I recommend when you're dealing with an error, because there are so many variables, it could be deposit high or low, it could be check high or low. So there's a lot of different variables to consider. So what I do is this, is I first identify what was the transaction that was an error. Was it a deposit or was it a check? Let's say, for example, it's a deposit. So if I know that a deposit was an error, I'm going to use my cash ledger to help me figure out how I need to correct the error. Okay. Now what I know about deposits is that deposits cause increases in the cash balance. So I'm going to put that deposit on the where deposits would go. They're going to go on the left side or the debit side. So let's say there was a deposit for $100, but our accountant accidentally recorded it for, they missed a 0, they recorded it for 10. Okay, so what would happen is this. The first thing you need to do is to put in the amount that was actually recorded. So what did the accountant actually put in there? Well, in this case, the accountant put $10 here on the deposit side. Okay. The second step in the process is we want to identify what was the correct amount. And that's going to go on this line right here. Well, the correct amount was $100. Okay. Now the question is, what do I need to do in order to fix this error? And that could go on either side depending on the scenario. In this particular case, I know that I have a debit of $10, but that debit wasn't enough. I need to debit more. So I'm going to debit another now $90, and that's going to then correct my balance to what the deposit should have been recorded at, the true deposit amount, which is $100. So in this case, if I was going to do the bank reconciliation, I would put this difference on the book side because it was the company's accountant that made the error, and I would put it on the add side because I need to add more cash to my account in order to correct this error. Okay? Now, that's not always going to be the case. Okay? You can't say that every error is going to be an addition on the bank side or on the book side. It will be different in every single scenario. So you have to go through this whole process. And again, you know, if it's a check, you're going to do the same thing, but it's going to be on this side. And you're going to do that same 3-step analysis to figure out what you need to do to correct that check. So let's take a look at the example that we were doing earlier, and there was an error there, and the error in particular is here in the orange section. Okay, we see here that there was $644 check recorded on the book side, but the bank recorded it as $654. So the same check number, $1788, but different amounts. So at this point, we don't know who was right or wrong. We don't know who made the error. So we need to look at our additional information. And here it says, check number 1788 is correctly drawn for $654. So $654 is the correct amount. However, the record keeper wrote the wrong number down and put $644 in the cash account instead. So we have to go through this 3-step process to figure out how we correct this error. So first of all, we know that because our accountant made the error, it's going to go on the book side, but we don't know if it's on the add side or if it's on the deduct side. So we're going to go and do our analysis here using this ledger. Now, this error has to do with a check, so we know checks go on the credit side because they reduce our account. So the first thing we're going to put in is the amount that was recorded by the accountant. Well, the accountant recorded $644 as the check amount. But then the second step of the process asks us what should have been recorded. Well, the correct amount of the check was $654, so we put that amount here. Now, the difference between those two numbers is $10, but the question is, do we need to add 10 more or subtract 10 more in order to correct it? Well, in this case, we're going to have to subtract 10 more in order to correct this error. We didn't subtract enough. We only subtracted $644 for the check. We should have subtracted $654 for the check, so we're going to need to subtract 10 more. So we put this difference here on the deduct side. You only put the difference. You don't put the full amount. You don't put the 644 or the 654. You need to put only the difference because that's the only part that's different between the bank and the book balance. So we're going to put right here, error on check 1788, and we put $10. And again, this scenario would be different if we recorded the check too high instead of too low. So you have to, again, go through the whole process to figure it out. So that is our error. And now we have accounted for all of the differences that we found between the bank and the books. But before we move on to the next step, I just want to mention some other situations that could be errors. Sometimes, so in that particular case, there was just something that was the wrong amount. Okay, the same check was there, but it was just two different amounts. But it could be that a check could be entirely missing, or there could be an extra item on there that you didn't know. So if something is missing, it could be simply that one side forgot to record something. Okay, we're all human, we make mistakes. Maybe the bank forgot to record something, maybe the books forgot to record something. Okay, it's not an intentional error, it's just, oh, oops, I made a mistake. Sometimes there might be a difference because the bank deposited or deducted something to the wrong account. They put money in your account that they should have put in somebody else's account, or they took a check out of your account that they should have taken out of somebody else's account. So that's possible. Again, nothing intentional, but it is still something that needs to be addressed. But it could be that there is fraud. Okay, so if a deposit is missing, say you sent your employee to the bank to make a deposit and that money is missing, could be that they took it, and that would be fraud. Or if you see a check on the bank statement, somebody had written a check, but you never wrote it, and then you look at that check and you see that it's written out to somebody it shouldn't be written out to, well, again, that is fraud. Maybe somebody stole one of your checks and wrote a check to themselves. So that is why the whole bank reconciliation process is helpful. It helps to identify errors so that we can correct them, but it also potentially helps to identify fraud and areas where we need to maybe have better internal controls to prevent that fraud from happening. So now we have gone through most of the steps of the reconciliation, starting with figuring out the balances, finding the differences, putting all the differences in the bank reconciliation, whether due to timing differences or to errors. And now we still have a couple more steps left, including the most important step, which is the actual reconciliation. So stay tuned for the next video to see how to do that.